Hey everybody, putting together this thing on contrarian trading today. Basically, I've been going through all of our footage over the last few years. So it's been around for a while. I've been filming interviews for a long time. I think it's important in today's day and age to really talk about contrarian trading. There's way too many people who have it in their head that they have to trade like somebody else, follow somebody else's plan, follow the mainstream media's plan, something. And the last few years have really taught us that that's the furthest thing from the truth, no matter what time frame you trade. COVID's happening, the market is crashing. We're in the middle of a shutdown, the market bottoms. The depths of the Great Recession in 2009, the market bottoms. We see these things over and over again. And the approach we've learned that most of the traders will talk about today is a contrarian approach, meaning it doesn't always mean going against the crowd, but sometimes the trade starts out against the crowd. And a lot of people will hate the trade you're going to put together. And that's okay. You've got to learn to be okay with that and just continue to do what you do well. Everybody has a different time frame. So, if I say, hey, the Nasdaq's going up today, I'm talking about a long-term time frame. And then if somebody says, hey, I think a market's going to go down today, they're talking about a short-term time frame. So identifying your time frame, putting that together, and then figuring out ways of being a contrarian. It doesn't mean just going against the grain. It means, how do you systematize it? Someone like Jason Shapiro, who you hear from today, has his one strategy. Someone like myself has another strategy. This could be being using sentiment data, COT report, or just a feel from the market like Mish. You'll hear from those two as well as Markets of Mayhem, Tony Greer, and Victor Sprandio. So, all right, guys, have a good one. Hope you guys enjoy this. Let me know.
Chart telling you in 87 that really kind of made your mind made up. And then also you kind of stepped on the gas at a certain point. So if you could kind of go over that story a little bit.
Well, in that case, in 87, the markets had risen to almost like valuations, not like today, but close. In other words, the market got overbought, it got overvalued. And there were many subtleties to that trade. But firstly, I had made money throughout the year. So I was up. And the market was, hold it. Are you there, Jason?
Yeah.
Okay. I got an incoming call. I hit the end button, but I hope I didn't cut you off.
Okay. Oh, no, you're fine. No worries.
So anyway, so I was looking for a top. Now Greenspan comes in, and fundamentally he's starting to raise rates. Now, if you did that today, the world would collapse overnight because everybody knew what raising rates meant. In the earlier day, in the 70s, nobody even knew what the Fed funds rate was. They didn't know. In the 80s, they were starting to understand that interest rates drove the market to a large degree. So there weren't as many people versed in what interest rates meant. So then you get to the setup in Dow theory where you had a higher high. I can't remember the circumstance exactly, but there was always this divergence. And then there's a sell-off, which happened on a Friday because Monday was the crash. And it broke through the lows. Now, I was already short. I added some shorts through puts. And then, by the way, then I got lucky because the real event that killed the market, and again, see, this is an unknown event, and this people should relate to what's going on today, is it's going to be one of these events. James Baker III didn't want, they wanted Europe to raise interest rates.
Yeah.
So we were coming into the 88 election. He basically threatened over that weekend that if they didn't raise rates, he was going to effectively, the words he used was let the dollar slide. That's an exact quote, which means devaluation. He didn't say how much. That's what really killed the market. But the setup was you had this overbought market, which like you have now.
Yes.
You had rising interest rates, which you don't have now, and the Fed said they're not going to do it. I believe they won't raise rates, but long rates are going up, and that has a slightly negative point. But the key was there was a bit of luck to it when James Baker threatened to devalue the dollar. He didn't say it that way. He said, let the dollar slide if the Germany didn't raise rates. And that's what crushed the markets. So you had a number of issues that were occurring at that time. Part of it was luck. Although I think I would have seen the late Friday sell-off. That was before Baker talked. So the key was the market was set up to sell off anyway. And I would have been right, not to the degree I was. I actually shorted the opening. I rarely do this, but the Monday opening, when I heard what he said, now again, I highly suggest that your traders use fundamentals as well as they do technicals.
Yes,
some people weigh one or the other, but the key was that when I knew when he said that, that the market was going to take a big hit. So I shorted the S&P. These were the not the mini futures. These were the original futures. $500 a point. And I shorted 5 of them, just 5, because I was already short. And I shorted down 15 handles, and I made $250,000 on that trade. Just because I understood the fundamentals.
Yes.
You see, so what paid me on that piece of the puzzle was knowing what it means if you're going to devalue the dollar suddenly, which is what Baker was suggesting. So, if I had to now, let's say, give some advice here.
Please do.
The key is everybody is watching the Fed. Okay, and the Fed is really turned into something that Alan Greenspan should be really criticized for in teaching these people how to overuse the wizard's wands, But the key is everyone should pay much more attention to politics around the world, because politics are going to determine Fed actions. So the primary is not the Fed anymore. You know what they're going to do. They tell you, everybody knows, everybody's following the Fed. It's going to come from the political end. And I would say to try to stress, just like that example, really what made me the money was knowing what it meant when James Baker said, I'm going to let the dollar slide. That's made me $250. Now I made a lot more money. Strangely, I had, these 39 traders. Again, I've been bearish. I told them that. They read that Barron's article.
Yeah.
Half of them lost money. So barely I made money as a firm, and I knew friends that got blown away. So I was happy. But I should have made 10 times the money I made. But you see, these traders did not follow the knowledge. They didn't follow the knowledge, and they didn't follow the disciplines. So, it was not a great business the way it was set up. But anyway, the point is you must follow politics under these conditions, because what's going to happen if you look at history, and I'm going to give you one other example, just to make it concrete. In the 60s, and I was watching the markets. I wasn't trading. This is 1962. And Kennedy was president. And he basically, the steel companies are raising prices. He basically attacks the steel companies for raising prices. which in that day looked like socialism in the minds of the people of that day.
Yeah.
The market dropped 26% because he interfered with the markets on steel price. See, that was an unknown thing.
Yeah.
It really was not something somebody would have, let's say, made a call on, that, you know, he's going to say that steel companies shouldn't raise prices. It was, the key there was it was interfering in the marketplace. And the market looked at it as socialism, the beginning of socialism. So it tanked 26% in 2 months.
Wow. Go ahead.
No, I was just saying, just as a oddball example of why you got to expect the unexpected, and it's going to come from politics. Somebody is going to do something or say something, and it's going to affect the markets.
My voice didn't carry, that I had to kind of look and see the eyes to know when something was going to shift.
Yeah.
And I learned to do that. It was just a little teeny shift you might see in a few of the guys' eyes that you knew, uh-oh, we're all caught long, and I just got one hell of a big short order to sell. And that's, you know, Keith's got that, Jeff's got that, I've got that, but I have it from a different perspective because Keith was in there doing battle. But not me. I would jump in and out. When it was slow, it was better. But I started actually sometimes passing orders into the ring so that I could have some level of self-preservation without getting hustled about too much. Not that I ever got hurt there. It was just, I couldn't think. And I certainly couldn't scream. So I schoolyard whistled my way a lot, but I would then deafen the guy next to me. And he said, Ish, please don't do that anymore. So those were the first 3 lessons. There were a couple of others, though, that are so invaluable. When I would have any kind of a losing couple of days, or for me, again, losing was not making money. I could not afford to have any risk involved because I had no money. I had money after a while, but I started out with no money. And, you know, that mentality kind of stays with you. Yeah. So the guys would say to me, bad mentality. You have to come into this place. And of course, they didn't use buzzwords like abundance back then, but they would say, go out and buy something really expensive, even if you're losing money. I'm like, oh, no. They say, no, if you go out and buy something really expensive, you're changing your mindset. And you're thinking not from this fear, but you're thinking like, oh, you know, I can actually afford to buy that really expensive thing, even though I had a couple of losing days. And essentially that feeling of abundance or getting over the fear of losing is really what has that whole thing came to. As I got older, I realized what the lesson was in me was that never be afraid of taking a loss, as long as you know it's a controlled loss, just get right back in there, which I do. I'm fearless when it comes to that kind of thing. I can have 3 bad trades in a row, but it won't stop me from the 4th trade. And that could be the one that makes up for all the money that I just lost in the last 3. And then I think the other thing is about adding to your winners. Because my natural inclination when I was younger again and less experienced was I had a really good day. You know what? I'm going to leave and I'm going to go to the movies, or I'm going to go shopping, or I'm going to go for a run. Because I ran my way through the 13 years down on the floor. I had a train. It was like a full-on training. I mean, believe me, there was a lot of partying going on. It was the 80s, but I always had to take physical care of myself just because I couldn't go in burnt out the next day and perform. But anyway, so this whole idea of what are you leaving for? You're having a great day. You should be trading more. And I'd be like, oh, I had a great day and I made a couple of $1,000. What more do I need? You know, that kind of attitude. And they taught me that was wrong. If you're doing well, and obviously you've positioned yourself into something that is gaining in momentum and in price, buy more. Just use a different risk parameter. So all of these really, I think, are things that most people do not learn when they start trading. They may learn about charts and they may learn about different chart patterns, and they use all different types of indicators, the MACDs and the Fibonacci's and all this other stuff. And that's all great, fine if you want to use it, but they're all in my soul because of that market timing that I learned back then, and the macro that I learned, because I could see, oh, gold's out of favor, but now we're moving into treasuries, because there was also the Finex market was down there too. So that was, oh, well, why is that happening? Why is gold all of a sudden out of favor? You know, and that was really, I think, what did it for me. And that's why here we are all these years later. And instead of being burnt out on it, I'm probably more excited than ever because the market has so much great opportunity.
Yes, absolutely. And those are all fantastic. Why exactly do you think a lot of us who went that route of finding something like libertarianism and Rand to something like that, and then we all end up finding this style of trading that's also very just figuring out kind of what works? So why do you think that is the case?
I believe that to be a good trader, one of the first things you need to do is take self-responsibility. And Ayn Rand talks a lot about the self, and why if everybody in a society first and foremost takes care of self and takes care of the responsibility of being a good self, and then understanding that everybody else out there around you also should be doing the same thing, and that where there's a disagreement, you come to an agreement about what makes most sense between the two selves, but that both selves should be striving to maximize their own utility. When you start taking on self-responsibility, self-confidence comes in, self-awareness comes in, discipline comes in. You need all those traits to be a good trader. So a lot of good traders are libertarian because they don't doff off their responsibility to the government or to, the Democrat or Republican Party or whatever party you're talking about, or whatever politician is going to save me. Libertarians would believe, no, we'll save ourselves. We'll take care of it. I don't need you.
Yes.
I'm going to figure it out. And that's what a great mentality for a trader, because if you're blaming the market or the specialists on the floor or your broker for the bad stock tip or that neighbor that told you to buy XYZ at the party last night that didn't work out, I mean, you're not doing good trading. You're just fooling around.
Absolutely. And that's something I talk about a lot, which is you have to have the right mentality to do this well. And if you have the mentality that everything's unfair, life doesn't work out for me, and you're woe is me all the time, you're going to continue to do terrible at trading, because you have to have that self-respect, that confidence, that ability to look just inside and be strong in there, and also to just withstand all you're going to take from trading. There's going to be pain, and learning how to handle that and learning how to do that is something, you learn from books like that.
Yeah, how to overcome challenges, how to get better at whatever you're doing. I mean, I'd say not just trading, that life, what you just said is about life. How can you be going around thinking that the world's a tough place and I got screwed by who I was born as or color of my skin or anything, and then you're going to try to make a success of yourself? You're always going to have excuses.
Yes.
Yeah, there's no excuse. Just bear down and figure it out, and figure out what you got to overcome and overcome it, and beat the challenge and manage your risk and exploit your opportunities. And I don't think that, I mean, that in life, that's a good formula in my opinion, and certainly in trading.
Absolutely. And there's a reason why
I think there's a difference between being an analyst and a trader. Traders have one personality type. I couldn't sit there and write about something and be wrong about it for very long. That's just not my personality. I don't think that makes money. But I know plenty of analysts who, when energy was in a shit show for God knows how long, since 2016, it just kind of was in a downtrend. Even before that, really, it peaked in 2008. And then recently it starts to move in an uptrend. And these people that I know were energy traders that whole time and being long all these individual energy stocks and getting hammered every single year, basically. Now they're talking about how amazing they are. And they're analysts and they're talking about, oh, my returns are great now. And it's like, I couldn't sit there and tell people to be long something for 10 plus years and then say I'm super right. Like I would have just been like, okay, well, I'm moving the fuck on, or I'm shorting energy or something, like there's no
I
way
heard
I
a
could sit
great
there doing that.
there was a guy on my Discord gave us a great quote last week or a couple weeks ago.
Yeah.
He's a broker. And I guess he brokes to hedge funds or whatever. And he was talking about how he was at dinner with a few of these guys, and he was like kids that came out of the Ivy League and were like in their mid-20s,
yeah,
and trading the markets, and they were getting like run over or whatever. They said, well, they literally said this to him. Well, guys like us who are smart, we're early all the time because we're so much smarter than other people that we see things before the market sees it. Okay, good luck with that. You know what I mean? Like this whole thing of we're early is like you're not early. That's
you're
just
wrong.
another word for you're wrong, dude.
Yeah.
You're wrong. Okay.
Yeah.
So
and that's it's fucking blows my mind when people say things like that, and it's
even have something come out of somebody's mouth like that. First of all, is like, okay, dude, I'll fade you all day. Just the fact that you think like that is scary to me, right?
Yeah. Just so much smarter, like and it's sometimes you're early and sometimes but that doesn't mean like I'm gonna sit there and be in a position early and say, oh, I was early. Like I was wrong. I took a loss on it. I'm gonna wait again, like I always talk about certain trades, some of my best trades, they come on the sixth signal, like that's okay too. But sitting there holding things because you're so wrong and you think you're so right, that's what costs you everything. That'll blow you up quickly. That'll cost you everything over and over again. The positioning in those hedge funds and the people in those hedge funds, sometimes like you see that thing over and over again where they're so right, we're so wrong, like there's that you and even like someone like me, I've had these conversations with other guys as well in the hedge fund industry, and you're having these talks about things like this, and you're like, okay, well, you've been talking about being long this for this long. Your fund is long this for this long. You never thought like, hey, I'll just get out of it. The greatest thing I think I'm seeing lately is like this NASDAQ thing, and maybe it's turned here. I don't know. But, I'll never know. But they've been short since October anyway. So like they've been short since the bottom. So who fucking cares? Like you've been wrong since the bottom. You're holding it.
They're just early, man.
Yeah, they're just there, like in a 40% rally. And it's like, what? I don't understand what you're getting at. What your ego's sitting here and telling you that you've got to be right. You've got to be right.
Especially those guys. My big theory does if you look at someone like that, right? So what did they do? They went to high school and they worked hard and they did very well. So they got rewarded for their hard work. So they went to Harvard.
Yep.
Where they worked hard, did well, and got rewarded by getting hired by some big hedge fund, right?
Yep.
So in their mindset, that's how things work, right? And maybe in some parts of life, that is how things work, but not in this.
Not in this.
This is not how that works
at all times.
Yeah, and I think that's one of the biggest things about it too. You put it well in saying that, this is a really difficult way to make money. And that's true because you should set expectations realistically for people that are coming in. You can't just be complacent. You can't just try something and hope it works. You really have to come up with a discipline and a strategy and approach markets through the lens of whatever you think about what's going on out there in the bigger world. You can't necessarily let that color your positioning in a way where you're missing out on opportunities or you're willing to take losses that you shouldn't. At the end of the day, the market is going to speak for itself. It's going to set the trends that we follow. And sometimes the news will follow it. Sometimes it won't. But making sure that we are not blind to what's happening in price just because of a narrative is really important. And that's one of the things that, quite frankly, it's difficult, I think, for people on social media to discern, that, there's this sort of very binary view, like whatever this post may say, even if it's just the data, and the data doesn't look good, well, then the person posting it must be full port leverage short with 0 DTE puts. And if it doesn't play out in the next 5 minutes, then they're a charlatan. And it's like, it goes a little far sometimes. And maybe I exaggerate, maybe I'm not, quite honestly, but the reality is that there's a lot of nuance here. And a great example of this is if you look at AAII sentiment as a measure.
Yeah.
And you have these really bearish readings. Jason, you and I know, and most, if not all, the people listening know, the most of the world is long. So when someone's really saying, I'm very bearish, what that probably means is they're not adding to longs. It doesn't mean they're max short. It may not even mean they've raised any cash.
Yeah.
So, when we look at those readings, I like to, and this is something that, I use as a bit of my nuance in my process and some of the models I built. When I look at a reading like that, the only thing I'm concerned about that has like a low grade weighting, but it's still a weighting, is a blowout in bullish sentiment.
Yes.
Because in bullish sentiment, now we're seeing, okay, maybe there's an excess in positioning. Can we then see it in the flows? Can we see it in the positioning? Can we see it in the charts? And if it all starts to add up to the same equation, and then we see momentum shift, then we know there's potentially an opportunity. So it's like there's a process here. And I know that you and I, we encounter this kind of stuff. And I think it's important because there really is a lot of binary thinking. It's important to clarify that when we're looking at something and talking about it, it doesn't just necessarily mean we're like full port, long or short, based on whatever context is inferred from that post. We might just be making an observation, or we might just be sharing information and letting people do what they should do. And so the point is that just as it is important for everyone out there to learn and to keep an open mind, it's also important to look at the world of finance as a massive amount of gray area between buy and sell.
Yes. No, that's well said and very important. I think we run into that a lot. More than anything in the world, like I can't, if I'm long, it's like I can't say anything that would possibly go against myself, because that's the thing. Most of the time I'm long something and I'll get data, and it's not, and like, not to mention, the VIX is very low. And so you look at those things, and for me, if I'm thinking of it in my time frame, I'm kind of like, I don't really, the sentiment, the VIX being so low, it doesn't bother me as much as it might other people. But at the same time, I might look at that and go, oh, well, I should be ready for a pullback here. Like it's going to happen at some point. It's not, nothing goes straight up forever. And that's all, like, sometimes we're saying, it could be as simple as that. And, you trade on all different time frames. I trade on a couple different time frames, but I don't have anything that's that short term. So you have to, as you having your time frame, that's the difference between a bit like a good trade and a bad trade for you. If you have this type of pullback. So just understanding, like, we're getting a little bit stretched here. I might run into a situation that could wipe out some of my profits. Maybe you might be a person who trims positions out there listening right now. You might be a person who just gets out of positions at a certain point. The biggest part about it is understanding, like, what do you do as a trader? Like, I don't care what I do or what anybody else does, like, you don't care what we are doing. Care about what your thing is, and then how we can help you to identify those things or inspire you to build a platform for yourself or a system for yourself, because that's more important than anything else. When you're sitting there and going like, oh, I had somebody wrote me the other day and said, they were talking about like macro gurus and this guy, and like, honestly, this has been the theme of the last couple months. This guy told me to be short and I'm short and now I'm stuck. Like, number one, if you're talking, yeah, there are some people who might be charlatans out there, but if they are not, most likely nobody has enough money to continue to hold short forever. If they had a position or an idea, and let's say their system said blank, and or what they usually do, not even a system, but their discretion says blank, they go short into something.
and then go, okay, well, you know, when this hits, if somebody doesn't tell you, you know, when this hits this level, or if you don't look at your own trade and go, when this hits this level, I'm out, you know, you're a charlatan to yourself. You can't put that responsibility on other people, because at the end of the day, those guys out there, they're not going to give you your money back. Like, so, you know, there's never going to be a day where you're listening to Motley Fool and they're going to say, well, sorry you went short for so long, you know, here's your money back. Like, that's never going to happen. So you have to be you have to be willing to come in and go, okay, well, here's my positioning, here's the size of my account, here's, you know, the amount. And that's, I try to talk about that stuff a lot, but I know that's not what the normal trader really cares about. You know, I was you know, in your group the other day, and we were seeing the same kind of thing where it's like people, and people in general, my group, your group, Twitter, everywhere, what they want to do is they want to go on and say, you know, I went long here. So like in 6 months they can be like, look at me, went long there. You know, like, it's like they want to like predict these things and tell people about it so they can come back and tell you how fucking smart they are. And really, like,